This cryptocurrency cycle feels different. I've been through 2017, I've been through the 2020-21 cycle, and this one's even harder. But today, I'm going to explain why. So the first part of the cycle in terms of my experience from 2016 to 2017 into 2018 was known as the Wild West. This was when the Bitcoin market was introduced to something called altcoins, ICOs. It went a bit mad. And back then, Bitcoin was the currency for exchanges to deal with, essentially. To buy an altcoin, you had to trade your Bitcoin, which is why I think I confuse people when I talk about Bitcoin currency pairs. This meant that naturally, as ICOs grew and people invested their Ethereum into these startup companies, or DAOs as they were known as, dominance fell quite a lot. And then as things shifted, Tether got used more, and Ethereum became the base currency for the ICOs, until it crashed, of course. And retail went crazy. We could get into these without any issues at all. And even though there was no website, there was no product, there was no nothing, these products still went parabolic. And it really was easy season. Let me show what I mean. So I've just found a little gem, and I'm really excited to go through it with you all. This is the year 2017 cryptocurrency report from CoinGecko. And this really does go back in time. Now, this period alone on the screen is Q4 market capitalization versus transaction volume. You can see the growth and a significant increase in trading volume and the price of the said market cap at the time, and also what the top 30 cryptocurrencies were at the time. Wow. And also here is Q4 top 5 cryptocurrency price growth. Yeah, I'm not joking. That is 500%, 1000%, 150,000. You get the idea, right? Look at what the likes of Cardano did, for example. And that was just top 5. But on the screen, just by my head, and I'll zoom in for you, you can see the returns. Yeah. And again, we talk about the significant price growth. It's all here. It's all there. It happened. And this is why people, I think, personal opinion, are expecting these types of growth again. I don't think it's ever going to happen. I'm sorry. And on the screen here, this is the quarterly market distribution of the top 30 cryptocurrencies. This is why the market cap of Bitcoin dropped so much, because everything rose. But the amount of trash that was in that top 30 was unbelievable. Like BitConnect, for example, Ethereum Classic, for example, Bitcoin Gold, Verge was an unbelievable asset at the time in terms of its price growth. There's some absolute shocking stuff. And guess what? Where's Tether on there? But let's go back in time. Let's talk about all these little things that happened and why it happened and the incentive for why the increased attention of the market happened. And we're talking in 2017, there was a lot of stuff happening. Obviously, Bitstamp launching pairs. There was a lot of China banning. Kraken acquires CryptoWatch, for example. Bitfinex announces trading of Dash again. SEC rejecting ETFs for Bitcoin. You get the idea, right? Not to mention going into Q2, there was a lot more suspensions of fiat deposits on Bitfinex. There was, the cryptocurrency market cap crosses 60 billion in the 18th of May. And I remember not long after that was a bit of a market crash in that June-July period, because I remember quite well. And then we got SegWit was released for the Bitcoin code. And then we had, as I said before, the dip, regulatory impact, and we had Bitcoin Cash, the hard fork of Bitcoin, which was mental at the time. There's all kinds of stuff here. And this is just going through that period of cycle. Paris Hilton endorses some random coin. Jamie Dimon calls Bitcoin fraud. Oh, it was unbelievable how crazy it was. And then all of a sudden, we go into Q4 and it went absolutely giga pumping. It was mad, right? And we're talking about Hyperledger. We're talking about big companies getting involved. You talk about Visa, and Tether claims a $30 million, dollar token stolen. All kinds of stuff was happening. Then the whole ICO boom happened, and it just went berserk. But even looking at the likes of the regulatory stuff, if you just pause the screen, you can see. So let's go into the world of ICOs, right? Remember that whole phrase of initial coin offerings and how crazy it was? Well, this gives you an idea of how much was actually raised and how many tokens were actually released. It was getting mental, and it really was just a bubble. And this is also the top exchange at the time. Now, Binance wasn't long released. It was only been around since 2017 at the time. It was only out a year, which is crazy in itself. Obviously, you've got some other big exchanges that have now fallen by the wayside. and some that are kind of still here and doing much better than what they would have been. This was before the likes of Bybit, for example. This was before Qcoin. And let's talk about price performance, because this was Bitcoin performance year to date was pretty damn good. And I don't think we're going to see those sort of returns, but that was over the course of the 1 year, not the cycle, by the way. So, yeah, in a 1 year period, pretty good. Obviously, Ripple was ranked number 2 at the time and still a top performing asset in terms of its scalability and stuff. But ultimately, are we going to get price performances like that again? Probably not, no. And obviously, Ethereum led the way for the ICO boom, and this was year-to-date performance. This was before the all-time high happened, so it went even higher than this. And obviously, Verge had one of the biggest ever spikes in terms of real time. This just changed lives. If you're in this, you would have known. And Cardano, one of the standout performers of the ICO boom, was released, literally perfect timing, went absolute crazy, and actually went to $1.14. And Neo was one of my first altcoins that I bought back in the day. It did fantastic. I sold it a little bit premature though, but it was called Ant shares at the time and it was a fantastic asset, and yeah, it did well. But as I say, these sort of returns, crazy. And the free money at the time was Bitcoin Cash. The hard fork, you got 1-to-1. If you had an X amount of Bitcoin, you got so many of these, you got free money. And even Dogecoin back in the day was doing very, very well. Now look at what the price is of that. And one of the best performers was a thing called Railblocks, which you may have heard of, you may not have heard of, but yeah. Can you see the price difference? And when you compare it to the other markets, for example, Bitcoin versus non-cryptocurrency assets, it absolutely just destroyed the entire planet. It really did. And even today, you could argue it still does similar sort of vibes, maybe nowhere near as heavy, but ultimately it does still outperform for the majority of the time. And again, we talk about the element of cash is trash and how many Big Macs can you buy with one BTC? Well, yeah, interesting. Bitcoin's purchasing power increased by 16x. And not to mention Google Trends. It was literally retail led. And when you had crypto led, we also had a lot of thefts. And even though we had loads back in the early days, we talk about what happened from 2016 onwards. There was a lot of things happened, a lot of hacks. Bitfinex got hacked. Obviously, a lot of DAOs got hacked as well. Other exchanges, it started to pile up. But you also talk about stuff like this. Bitcoin's 2017 rise was market manipulation by Tether. Now, Tether is always on the brink. It's always going to get banned. It's always going to blow up. It's always going to be insolvent, right? And this is the thing. When we talk about how much Tether grew in that time period, which was quite a lot, by the way, with the ICOs and stuff like that, it became very, very interesting to see what people talked about. And obviously, all of these accusations and the subpoenas and everything about Bitfinex at the time was pretty crazy. And then we talk about the futures announcement from December 2017, which literally crashed the entire market. Makes you wonder, was it very much like a Ponzi-like thing? But it was unsustainable. The amount of growth that we were getting at the time was unbelievable. It was crazy. All these ICOs, for example, here, which is mentioned, and how they just printed money, then they got put back into, say, for example, if there was a capability for it going into Tether or going into Bitcoin or going into Ethereum, it wasn't going to go up forever. It was literally one of the biggest bubbles ever, obviously. So that was the Wild West. But let's go into part 2, institutional money and rotation, not to mention COVID and stimulus, right? Because Bitcoin halving created a micro kind of climate for low liquidity due to COVID. What happened? We know what happened. Oil crashed. There was no money. It was a bit horrible. And altcoins like Cardano, like Chainlink, like Polkadot, like the meme coins and NFTs went on huge runs because they had low liquidity, and then all of a sudden money came rotating in. Remember Tesla buying into the likes of Bitcoin and a lot of other rumors? It was getting pretty crazy. But it was still relatively retail driven. A lot of people probably came from that 2017, 2018 kind of experience going, I can make money here again. And a lot of people did return to the market. And obviously as well, the rotation was pretty damn clear. You had your Bitcoin into Ethereum, into your majors, into your mid caps, into your meme coins and your NFTs and all these kind of stuff, which did run. But for me, it was nowhere near like 2017. The gains were nowhere near as flashy. You made money, don't get me wrong. And a lot of altcoins did go from like all-time high from the previous cycle down to like 99% down, like Cardano, for example, or whatever, insert coin here. And some of them did bounce quite a lot. but nowhere near enough. And I think a lot of people did get burned in that last cycle with a lengthening cycle, and it made it a lot harder, but it did kind of act a little bit normal in that sense. And the big lessons were that bigger altcoins were obvious if you were patient. And I think we have a similar sort of vibe this cycle, which I think has caught a lot of people out because I think people are still chasing the gains. This is why people go to the casino. But ultimately, we've got to look at the obvious in the room. The climate in terms of the economy and what was happening around the world was very odd. Because what was happening, Bitcoin had an element of market liquidity. And when the likes of the cryptocurrency market was open 24/7, it still is obviously, it allowed people to pull liquidity out to cover positions in other markets and have cash. That created a big price crash, and obviously the recovery as well came about. And you can see here, the pandemic happened, multiple rounds of unchecked stimulus spending by central banks shook Bitcoin from its price, strengthening its economy position as a store of value. So there was a little bit of a to and fro between liquidity there. And we literally recovered very, very quickly, and so did the S&P not long after it, and all kinds of stuff, and it was all ticky after that. And then we went into this massive momentum run. But as I say, it didn't really just go crazy for altcoins. It was a lot of Bitcoin first. And you got to remember, Bitcoin went from $3,000. It went up a little bit, then went down to 5,000 again in the crash of COVID, up to $69,000 pretty damn quickly, by the way. It was pretty quick. So stuff like that was huge. And obviously the altcoins went with it. This time, though, it's not the same, is it? When we talk about what we're talking about now in terms of this cycle, 15,000 to 124,000 altcoins have not gone with it. We need to try and figure out why that's the case. And is it because of this? The multiple attempts at a Bitcoin ETF. What's happened this cycle? Well, let me explain. The big difference between this cycle and the other cycles are these. Let me explain in a bit more detail because I think people are going to get lost here. Now, this cycle, why is it different? And I think this is the ultimate opening question. Bitcoin dominance has been stronger for longer, and altcoins have seen very little spotlight. Put it that way. That's kind of the brutal honest fact. Now, that doesn't mean it's going to change at any point in terms of we're never going to get an alt season or it's going to be around the cut, whatever. There's always a situation where there's going to be a catalyst. But one of the main catalysts for this cycle is ETFs have made Bitcoin stronger. And finally, for the first time, ETFs for Ethereum have seen a little bit of a spotlight, but that still hasn't allowed a big rotation into other coins just yet. Now, one element that I've not mentioned throughout the entire two cycles, which is hugely important, is derivatives and perps markets are everywhere. Every breakout gets faded, every breakout gets sold into. And when we talk about 2017, there was no such thing as futures markets back in them days, right? There was no such thing as leverage. And even in the previous cycle, there was, but it wasn't on the huge scale. What made the market blow up in the last cycle was a mixture of greed and passive income, right? With Luna, with all the other stuff with BlockFi and all this kind of stuff. And it made it a real big ticking time bomb when those went insolvent. Even though there was liquidations and stuff, it wasn't retail liquidations. Now it is people trying to get rich quickly because of the past, in my viewpoint. It's like, I want them gains. I don't want them gains are coming again. And they're trying everything and they're over risking and they're making it all wrong. You've also got VCs and key opinion leaders, calls, in my viewpoint, selling. And I've seen this firsthand with a lot of projects. Many projects are VC backed heavily because retail can't get into them or they won't get into them. Now, as I said before, I know this firsthand with key opinion leaders because I tried a few. I tried it on the Rose ecosystem and literally they all did shit. They all crashed because they just all sold. They sell much faster, they get greedy, they get the good prices, and they just don't care. And this is probably why one of the main reasons why a lot of altcoins are struggling because people just don't care. There's a lot less retail in the market. A lot more people are in Bitcoin, they're in Ethereum, they're in Solana. It just makes sense. If your bags are doing well, why would you need to rotate into more speculative assets? You don't need to at this point until retail return. And they're obviously lagging. You can see they're lagging. They're off the floor a little bit, but they're not going parabolic. And if they do go parabolic, what returns are good? Is it going to be like 2017? No. Is it going to be like 2021? Probably not. Are you going to make 3-4x and be happy with that? I reckon most people won't be. And let me know in the comments if you won't be, because I think a lot of people have missed the optimum entry points. And liquidity. Oh, save the best till last, right? liquidity is tight. It's nowhere near as big as what it was. There's too many altcoins, far too many. Too many derivatives of an altcoin as the same thing. There's too much money in the meme coin market. There's too much money in the futures market. It's spread far wide, far wide. It really is. It's like the River Nile. It's ridiculous. So yeah, it's pulling most of its weight into the Bitcoin ETF, into the Ethereum ETF. You could argue into other funds as well. But the main factor here is they're not going into your $50 to $100 million market capitalization asset these days. But does it mean that it's game over? Not really. Because even though we have this on the screen saying it's not an alt season, in 2017 there were many altcoins that were down 99%. Not all of them, but some of them did rebound quite nicely in 2020, 2021. You've just got to pick the right one, which might be quite hard. And I mentioned before, picking the obvious and being patient. What's Solana doing recently? What's Ethereum doing recently? What could Cardano do? What could Chainlink do? They're obvious, right? But they might actually make you some money. For this cycle alone, we may well see a rotation later. It might just be slower, and it might be a lot smaller, and people might not like that. And as I said, the ETFs and the Bitcoin ETF focus and the institutional-led focus may allow Bitcoin to run first, harder for longer, which is what we've already seen. But the question is, what sort of correctional bias or bear market viable we get? I don't know. Maybe a lot less. Maybe we won't see those 40, 50, 60, 70% corrections anymore on Bitcoin. And as I said it before, altcoins may well run, but it may not be to the same extremes. And that might be what kills a lot of people's momentum. And I said it before in my Patreon like 2 days ago. People get bored in this market. They've had that 2017 experience. They've had that vibe. And even though we're seeing these sort of streaks on the right hand side of the screen here, not amazing, they're not. But people get bored, right? Because if you think about it, right, if you've been here in 2017 or even 2020 and you come back again, and this is a market that you've got, how long will people last? I think a lot of people, in my viewpoint, don't think of this as an investing market. They're looking for a vehicle to get rich quick. If you looked at it the other way, like a traditional market, you'd probably be very, very happy with this market. It's very, very fast. But as I say, not everyone does. But to be fair, we do talk about this a lot on my Patreon. There's a free link below, by the way, to the Patreon itself and also to the Discord. You can jump in. But yeah, I do extra videos and we do talk a lot on the MMQs, which is a Q&A session about a lot of this sort of stuff. So yeah, my closing thoughts. Each cycle is different from the last. It always will be. It may well rhyme, but it's never just the same. And this one does just feel more mature, more leverage, more institutional, which I think a lot of people dislike. And it feels harder, but only because of where the opportunities lie. If you got a bad entry, you may not find those returns that good. If you bought Bitcoin at the lows, you might be all right. If you bought Ethereum at the lows, you might be all right. If you bought Solana at the lows, you might be totally fine. But not everyone's like that. But let me know in the comments, what do you think? Do you think this cycle's harder? Or am I just overthinking it? And, let me know your thoughts below.